Hello, it's Doc's Market Minute for Thursday, the 20th of January. With today's sell-off, we're getting very close to some downside targets that I've been tracking for the last 3 months. Let's see what those are. Here is the S&P 500 futures chart, and the way I've got this chart arranged is even though the S&P 500 futures will trade nearly 24 hours a day during the week, I've got this chart showing only the price action that occurs between 9:30 a.m. Eastern Time and 4 p.m. Eastern Time. So any price movement outside of that time is going to create a gap. You can see an example of that gap between Monday and Tuesday, where the price gapped much lower this week, and I've outlined that with a gray square. So what you can see is that some of these other gaps on the way back up, back in October, left a lot of breakaway gaps to the upside. And we just closed this one today, so we can take this one out of there. We'll just go ahead and remove that drawing. So now we have this one just below the price, right around the 200-day moving average, which is the green line here. So this is a short-term target to close this gap, touch the 200-day moving average, and then you can see the 10% target down here, which is just below this monster gap, which started way back here on the 14th of October. So closing these gaps and maybe coming down and touching this 10%, even after the NASDAQ and the Russell have already hit more than 10% as of today. This area could give us a great short-term target, which may give just enough negativity and pessimism to be able to get the price to start to create that process of reversing to the upside. Now, typically what we're going to see is a lot of up and down, banging around in this area before the price does release. It's probably unlikely, very similar to what we saw back here, very unlikely that it's just going to V-bottom and go back higher. So prepare for a war in this area. Hope that helps. We'll see you in the next one.